Good morning everyone, and thanks for joining us on Morning Markets from True Potential. Today we'll build on the comments that Matt made at the beginning of the week, focusing in on the actions of the US Federal Reserve last night at their monetary policy meeting, thinking about the changes to monetary policy that came through there. So what did we get from the Federal Reserve last night? We had interest rates in the US increased by 0.5%. That takes the range of rate in the US from 0.75 to 1%. Quite a significant change from the Federal Reserve in terms of their actions. It's the first time that we have seen back-to-back meeting increases since 2006, and it's also the largest increase in interest rates that we've seen since 2000. So it gives you a sense of the action and the magnitude of the action that they're taking. I think really when we take a step back, what's driving the action that they're taking? Very much the inflation backdrop that we've been discussing over the past number of months. If we look at where inflation is in the US, it's 8.5% on a CPI level. The Fed's preferred measure of looking at inflation is personal consumption expenditure, and at our last reading that was 6.6%. That compares to a target of 2%, and that gives you the sense of the magnitude of the challenge that they've got in bringing inflation back to that target level. I think it's also worth noting a couple of the comments that Chair Powell made at the press conference. Inflation is too high and we understand the hardship it is causing. And that, I think, is quite an important comment because it also highlights that inflation is not just a monetary problem for the Federal Reserve to solve, but also it becomes a political issue, particularly important in the US as we move to midterm elections later this year. I think the combination of the interest rate increase that we've just discussed, but also the Federal Reserve highlighted the need to reduce the size of their balance sheet, which has grown quite significantly as a result of the COVID support measures. And that will commence on the 1st of June and then will continue to increase into the foreseeable future as well. Two measures aimed at reining back the high levels of inflation that we have today. But it is important to remember that it does take time for monetary policy to work its way through into the real economy. And that presents the challenge for policymakers at this point in time, navigating between the growth backdrop that we do have, albeit slowing, and raising monetary policy into that, or raising interest rates, I should say. That brings us neatly to today. We have the Bank of England deciding on interest rates in the UK. We're expecting a 0.25% increase there, taking the base rate to 1%. The Bank of England's probably in a slightly more challenging position because of, yes, we do have higher inflation, but we've also seen a little bit of a change in consumer confidence in recent months. But also April is the first month where we see the fiscal change coming through, and by that I mean the increase to the national insurance contributions. So that will certainly act as a drag on consumption as well. So we'll look out for what we hear from the Bank of England at lunchtime today, and certainly we'll comment on that tomorrow. I'll leave it there for today, but please do join us again tomorrow. Many thanks.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.